Hello and welcome to the Killik Co market update. As of Wednesday this week, the S&P 500 in the US is now in the longest bull market in history. It started back in March 2009 following the financial crisis, and it's now been going on for over 9 years, 5 months and 12 days. So we define a bull market as one in which a particular index has not fallen by more than 20%. So let's have a look at this chart of the S&P 500 over the last 30 years. So as you can see, during this time period, there have been a couple of major bear markets where the market fell by a lot more than 20%. One of those following the dot-com crash and another during the financial crisis. But since then, it has been very much an upward trend. We have had a few periods in which the market has fallen by 10%, but never by as much as 20%. So back in 2011, there was a fall when people got quite concerned about the level of debt in Greece. Then in 2015, people were quite concerned about falling commodity prices and about a slowdown in China. And then earlier this year, people were quite concerned back in March about the prospect of rates going up in the US. But the market has recovered from all of those things, and at the moment it is very close to another record high. And also this week, Donald Trump has been criticising the Federal Reserve for raising interest rates. And this is quite inappropriate because really the central bank should be completely independent of presidential policy. Now, Trump was actually quite critical of the previous chair of the Federal Reserve for keeping interest rates too low for too long. However, now he's complaining that the Federal Reserve is raising rates, and that's a problem for Trump because he wants to weaken the dollar in order to raise US exports, and also he wants to borrow more money, so a stronger US interest rate is not good for either of those policies. However, the central bank should be doing what it needs to do to keep the economy at a steady pace, and it does this by keeping inflation as close to 2% as possible. So let's have a look at where inflation has been in the US over the last couple of years. Now, this is core inflation, which strips out energy prices and food prices, and we tend to strip those out because they do tend to be quite volatile, so taking them out gives us a clearer picture of where inflation is in the US. So as you can see, there were a few months in 2017 when inflation was way below that 2% target rate, and that did indicate a lack of demand, and it was a bit of a concern for the Federal Reserve at that time. However, over the last few months, inflation has started to pick up, and classic economic theory would say to you that interest rates do need to rise further. So this week on Friday, we have got the Jackson Hole Conference. That's a major conference for the Federal Reserve, and we would expect to hear some further comment about future interest rate policy. And lastly, we've had a few of the major mining companies reporting recently, and a number of them have been quite cautious in their outlook because they're not sure about the impact of the trade tariffs that Donald Trump has imposed on Chinese steel. Steel is made up of about 96% iron ore. Now, if you have a look at the price of iron ore over the last few years, you can see it has weakened considerably, particularly in 2014, 2015, when people were quite worried about a Chinese slowdown. But you can see it has weakened further over this year since the tariffs were first imposed by Donald Trump. So this is quite difficult for a number of the major miners, particularly some of the larger ones that are very heavily dependent on iron ore for their revenue. And I think a number of investors is questioning at the moment whether iron ore is the right thing to be invested in because it is considered to be an early cycle commodity, and at the moment we are in the middle of the longest bull run in history. So I think a number of economists and investors are thinking about that at the moment. Now, moving on to the week ahead, it is a fairly quiet one because it is a bank holiday here in the UK, but we will be looking out for results from Vonovia over in Germany. That's it from us. Have a great weekend, and we'll see you next Friday.